Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you, and if you have not taken the time to do so, go ahead and hit that subscribe button down below. Hit that notification bell so you're notified whenever we put out any new content. On this channel, we cover dividend growth investing, trying to build a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching, stocks we're avoiding, updates like this one. Like I said, this is a portfolio update. I did add $2,254 in new capital to the video. We will see, or to the portfolio, I mean. We will see in this video exactly where those funds went here in a moment. I also do a stock pick of the day series Monday through Thursday when the market's open. The 19th coming up this next Monday is Juneteenth, so the market will not be open. I will not do a video, stock pick of the day video then. I also cover the stocks to buy for the following month as we exit a month. As we're getting close to, we're already halfway through June. I'll do one as we roll into July, and then dividends paid for the previous month. So I'll cover all the dividends that I received. But again, this is a portfolio update. So again, take a moment down below, hit that subscribe button, hit the notification bell so you don't miss any videos, and let's jump right into this portfolio update here. So I have added options to the portfolio as well. The last couple weeks I have not gotten any bites on the options that I've thrown out there. The market has really been screaming the last several days, or actually the last week or so. So a lot of the options that I put out there, out of the money, and they've run up to the green side, and really no one's biting on those right now unless you're willing to sell shares at a profit. And I did have this OHI call here, Omega Healthcare Investors call here, that was set to expire on Friday. And rather than having those shares called away because it was in the money, what I did was I bought to close. So I paid $431.06 to close that covered call. And the reason I did that was the call was for $29, so I would have made $29 per share, but it's $31 and some change currently per share. So I would have lost $412 just on the sale of those shares, and then I would have lost the $134 just in the next dividend payout. So that would have been a total of $546 and some change that I would have lost there. So rather than that, I paid the $431 so that I can keep those shares, hoping that they'll continue to run up. I may do another covered call on this one at maybe 35, 36. The idea is to keep the shares and collect the premium. In this one, it didn't work out that way, and I did not want to lose those shares. I have a pretty good cost basis on this one, so I was willing to, like I said, pay that $431 because of the nature of how far it is above this $29 strike price, right? I would only get the $29. I would not get the $31.06 that it currently is at. So that would have cost me $2.06 per share, which, like I said, $412 there would have just been the difference of the 31 to 29, and then it's paying me about $134 per quarter in dividends. So I'm going to keep that one in the fold. I did not get called away, and the reason it did not get called away is because I bought to close and paid this $431.06. Now, dividends received for the week. This date is wrong up here. Apologize for that. It should be the 15th. Realty Income paid out $32.85. So we received $32.85 in dividends. We still have the DRIP set on, dividend reinvestment plan. So anytime a position in the portfolio pays out dividends, it's going to go right back in and pick up more shares of that company. So whenever Realty Income paid out the $32.85, it picked up 0.53757 shares of Realty Income. So right now, every time Realty Income pays out, I'm getting over half a share. So that's a little over 6 shares a year. Right now, Realty Income is buying of itself, right? And that added those 0.53757 shares, added $1.64 in additional passive income over the next year. And I know that's not a lot, but every little bit adds up. That is what the snowball effect is about. Every little bit compounding on top of itself over time, and that snowball gets bigger and bigger. Time is the hill you're rolling that snowball down to make it bigger. And that's funds you add, dividends paid out, reinvested, right? And then the passive income, those reinvested dividends will eventually pay out as well. Now we are into the first portion of new invested capital, right? We added $585 split between June 13th and the 15th. On the 13th, we bought 12 more shares of Kraft Heinz, ticker KHC, out of the consumer staple sector. And if I didn't mention, Realty Income is a REIT out of the real estate sector, the one that paid out dividends we saw on the previous page. And those 12 shares of Kraft Heinz cost us $36.70 per share. This one is pulled back below my cost basis, so I'm back adding here again. I've been wanting to add to the consumer staple sector for a little while now. I'd really like to add to Procter & Gamble, but it is not really pulled back the way I want it. But Kraft Heinz did, so I took the opportunity and added 12 more shares here. Sabini Stillwater still is in the doghouse. It's still really cheap, so I've been adding pretty much every week, a big 10, 15, 20 shares. Ticker SBSW. This is a mining company out of the materials sector. I picked up 20 more shares at $7.25 per share. All total, that 585 added, and on the 13th and the 15th added another $27.60 from these shares picked up. And the most expensive day for me, the one where we put the most capital to work here, we added, and again, the date here was not correct. This should be June 16th. We added $1,669.58 more to the portfolio. And with those funds, 23 more shares of Sabini Stillwater, ticker SBSW. This is that same mining company out of the materials sector. We picked up those shares at $7.38. We added 10 more shares to our Bank of America position, ticker BAC, out of the financial sector. We picked up those shares at $29.53 per share. 10 more shares into Verizon, ticker VZ. This is out of the communications sector. We added those 10 shares at $36.64. We added a little bit more to AT&T, ticker T, also out of the communications sector. 10 more shares at $16.12 per share. Went back to Kraft Heinz and added a little bit more. So you can see Kraft Heinz and Sabini Stillwater we added on multiple days here this week. 12 more shares of Kraft Heinz, ticker KHC, out of the consumer staple sector. And those shares cost $36.79 per share. And we added a bit more to our Medical Properties Trust, ticker MPW. This is a REIT out of the real estate sector. 26 more shares at $9.06 per share. A lot of high payers here. Verizon, AT&T all paying around 7%. Kraft Heinz above 4%. Medical Properties, I think, is around 12% dividend yield. So a lot of high payers this week. So with the dividends paid from Realty and all total here, these ones here, added another $105.12. Total invested $2,254.92, and all total in new passive income added the $105.12 here, the 27 something on the previous page, as well as the $1 and some change that Realty Income paid out. Total passive income added to the portfolio this week, $134.36. And the passive income continues to grow. This was a really good week, even though it did cost us quite a bit in capital. Quick run through the sector weights here. Communications sitting at 8.66% of the portfolio. Consumer discretionary makes up 8.65%. Consumer staples is sitting at 5.96%. I want to continue to build this out. I'm hoping that Kraft Heinz stays down. I'm really hoping that Procter & Gamble pulls back as well, so I can add there. But so long as Kraft Heinz pulls back, I'll probably get that to around 200 shares and then maybe back off a little bit. Energy sector sitting at 7.19% of the portfolio. Financials at 11.74%. Healthcare is 14.12% of the portfolio. Industrials, 8.44% of the pie. Technology is sitting at 9.27%. Materials at 11.36%. Still no utilities. Still waiting here. NextEra Energy is starting to look pretty attractive. UGI, I looked at it. I'm just a little concerned with some of the numbers coming out of UGI. And the big pullback in natural gas right now, I'm actually thinking may last a while. We will see. But still no utilities nonetheless. REITs and real estate is sitting at the largest piece of the pie, 14.61%. Still makes up the largest piece, right, followed by healthcare pretty closely. And no ETFs. I do consider this overall my ETF, but I did maybe think about, like I said in the last video, potentially looking at a utility ETF just to cover the utility sector, because I don't have anything in that one right now. Over here on the right side, you can look at those sector weights a little differently. Here's the percentages, just like we saw here, but then it gives you the amount invested into each sector out of the total portfolio as well. And this is the total portfolio reveal, just like I do every week. Every position I own, the ticker here, total shares, how many I own of each, current price as of the close of business on Friday, the current market value, again, on the close of business on Friday, average share cost per price, my average share cost. My purchase price is just my average share cost times how many shares I currently have. Total return, whether I'm up or down, you can see that here. Percent return, right? You can see that here. It is back in the green just slightly. And that's the thing. Even though we've been down for most of the year so far, now we are back in the green, and that's what it's about. Just the overall portfolio goes up and down. That's not really what I focus on. I focus on the dividends paid out of the portfolio, the passive income. Here's the sectors, whether it's a quarterly, monthly, or semi-annual payer, the current dividend yield, my yield on cost, the portfolio weighting. So the previous slide we saw the sector weightings. This goes by position. So if you wanted to see which position Ally makes up 4.10% of my portfolio, you could run through all those at your leisure. Estimated estimated annual income in this column, what payout months they pay out in, the dividend growth year over year is this column, and where they sit at 15% of their 52-week low. I update this every week. So I don't like to invest in stocks unless they are below my cost basis or within 15% of their 52-week low. And that's kind of a rule of thumb and tells me where I can invest. Like really, it's easy to simple to look at here. Anything in the red right now, I would be able to throw money in, and anything within 15%. Let's see if we can find one that's within 15%, not in the red, but maybe within 15% of its 52-week low. Like Johnson & Johnson here, sitting at $164.23. Even though it is technically not below my cost basis, it is still below 15% of its 52-week low, right? So if I really wanted, I could continue to add Johnson & Johnson. Now, I probably won't. I probably wait until it drops under this 162 again or real close to it. But even at 164, Johnson & Johnson is not a bad buy, and I like it up to 172. So that's kind of what that number there is, or what that column there is telling you. All right, so total shares, I own 4,064.015 shares. The market value of the portfolio is $147,035.59. My purchase price, the amount I have into it, is $145,867.64, and it's currently up $1,167.95, or 0.80%. My current yield, 4.838. Or I'm sorry, the current yield, 4.838. My yield on cost, 4.877. And again, this is what it's all about, whether the market is up, whether the market's down, whether my portfolio is in the green or in the negative. I am focused on the passive income provided by the portfolio. The dividends paid out from the positions within the portfolio sits at $7,114.06, and this continues to grow week over week, and that is what it's all about in dividend growth investing, in my opinion. Current dividend growth year over year sitting at 7.99%. So if I was just to hands off this portfolio, doing nothing else, the average growth of the dividends would be at 7.99%, and then whatever the portfolio positions within it grew. So that is the reason for that column as well. Well, that is it for this one. Really appreciate you stopping by. Let me know down in the comment section below what dividends you were paid out this week. Did you do any options? If so, what were they? How is your portfolio doing? Are you enjoying a lot of the green here that we've been seeing? Now don't get me wrong. I like to see the green. I like my portfolio to be in the green. I like to see that I'm making progress. But it also starts to limit some of the positions that I want to add to. So I don't mind seeing red. And I know that's weird to say. I like pullbacks because it means I'm buying shares at cheaper prices with higher yields, with higher potential future returns. Whenever it starts to go green, it's kind of the time I want to hold off a little bit, even though this week I put a significant amount into some of those higher yielding stocks. Whenever I see a lot of green, it's really whenever I want to kind of back off and start stockpiling some cash, waiting for that next pullback or waiting for the next opportunity, watching positions a little closer, really. So maybe I'll look to do some more puts and calls for next week, some more options for next week. Maybe I'll focus on that a little bit this week since I have Monday off. Hopefully you have a long weekend as well. If not, apologize, but I'm going to enjoy my Monday off. I don't get a lot of them, so I'm going to enjoy this 3-day weekend. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join the vested interest community. Join us on this journey to financial freedom. Like I said in the beginning, trying to build a community of like-minded dividend growth investors so we can share our experiences, share things you've done well, share things that you've done bad, mistakes you've made in the past. We can all learn from each other. That's the idea of the community. Share stocks that you're interested in. Share stocks that you want to avoid. Ask any questions down below. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions, suggestions for future topics. If you have a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down there and I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria or seek advice counsel based certified financial advisor.